Today's brought to you by Silvercrest Opportunity Fund. Invest accredited and earn interest in as little as a 30-day program. Okay, we are live on Facebook, YouTube, and LinkedIn. Welcome to the Family Bank, where we provide investors a passive rate of return in first lien position, performing seller finance notes at a double-digit interest rate. This is the Mobile Mailbox Money Mastermind. We are live today, just a heads up. This is as involved or uninvolved as you would like. So we'll go over some of our deals. We've got quite a good amount of transactions going on. I've got my partner in crime here, Sonny Finkel. Appreciate you being here today. Investment liaison and niche market specialist in seller finance notes. Sonny, how long have you been with us? And if you could just maybe introduce yourself.
Valentine's Day will be 2 years. I'm Sonny. I'm the investor relations specialist, and I am formally licensed, still in good standing, just not active, as a realtor and a mortgage broker. So I have a lot of experience in this area.
So appreciate you being here today, Sonny. Wynn Mobile Homes is where these notes come available. We're the largest dealer of manufactured housing, possibly in the nation. We have about 50 homes in inventory. We've done 350 transactions, raised more than $15 million in private capital, and none of our investors have ever lost a dime currently. So hard to say out in the market, with adjacent real estate investment strategies and a lot of concern and misunderstanding going on in the market. You got high volatility in the stock market. Residential real estate, single family rental strategies are not cash flowing. Where's an individual to turn? Well, I think I have an option for you today. So we're just going to kind of dive in and get after it here. I'm going to share my screen. Cool. Kind of reorient this real quick. Give me one moment. Bear with me. So we have a couple of transactions going on currently. We have our inventory sheet where it kind of shows a little bit more in depth about what we have available and things like that. But if you haven't, reorient yourself with mobilemailboxmoney.com. That's where investors get choice picks just like this that we'll go over today, where you can give us your full name, email, and phone number. We won't blow you up by any means, but that gets you on our preferred investor list. So don't hesitate to do that. I'll have one of our VAs put that in the chat. If you could, mobilemailboxmoney.com. Feel free to visit that now. And if you have any questions throughout this, feel free to put that in the chat or unmute your mic, either or. Happy to just have you here today. So we've got lot number 36 off of major cross streets of Ellsworth and Broadway. This property, just pull up my sheet here on my phone. Give me one moment. Bear with me here. Lot 36 is a year 2000. It's a 3-bed, 2-bath off major cross streets of Ellsworth and Broadway in a 55 and older community by the name of Cielo Grande. This first lien note will come available. It's currently pending with a qualified buyer borrower going through the processes to get officially underwritten here at $60,000. So that's the price. The buyer will put let's see what their down payment is.
$5,000.
$5K. So on $60,000, if you don't have yourself a mortgage calculator, do yourself a service, because that teaches you how to reverse engineer a return on a seller finance note just like this. So $60,000 the price, $5,000 the down payment. I put in my term and interest rate, right? So at $60,000, she put $5K down. Your acquisition of a note just like this, 3-bed, 2-bath in the Mesa market, is $55,000. That's the unpaid balance on the seller finance loan that this individual is getting double underwritten in order to facilitate the transaction. That means it's a bank quality note. So $55,000 at a 20-year term is $683.94. So making $6,500 a year in passive cash flow secured in first lien with a buyer borrower currently being underwritten, providing a bank quality position. That's $55,000. Ellsworth and Broadway, 3-bed, 2-bath. Nice looking unit. We bought this property probably for 10 grand. We put 20, 30,000 into it, and we're flipping it for a profit on paper to a qualified buyer via Win Mobile Homes. So Win Mobile Homes operates as a licensed dealer. We have a licensed mortgage officer on staff in order to add further investment grade to our paper. So for an individual that has 55K in an IRA, solo 401k, or really just a personal LLC, this may be an option for you. Say you didn't want to own this note for a 20-year term, right? And you wanted to still participate, but not own the note for 20 years. Sonny, if someone were non-accredited, how would we navigate that?
So we would give them a construction note that would have a 1-year term, and it adds to the liquidity of being able to make decisions to change your mind and do other things.
So the term is hypothecation. So this note we can pledge almost in like a construction loan avenue, but it's actually a stabilized asset. So for the same $55,000 in 19 years of liquidity, what does that mean? That means we structure it at a 1-year term opposed to 20, right? And for a 1-year term at 55,000 divided by 12 is $458 a month. You're losing out on $200, but you get the back office and one of the largest niche market specialists to hitch your cart to with Win Mobile Homes, where we pledge that note for a 1-year term at $458 a month. And in any case of non-performance, we actually step in and reperform that asset at no cost to the investor. So you got 19 years of liquidity, right? You still get a double-digit interest rate in a monthly income-oriented investment strategy, and you become one of us at the end of the day. You join the family bank and start participating passively. There's an element of owning a note and hardships associated with doing so. When an individual comes to me and they say they want to buy a note, I kind of vet them a little bit more of, what their expertise is. Is it landlording? Is it buying notes? If you're not a niche market note specialist, you may want to go with something more passive, and what that looks like hypothecation, right? Or if accredited, you can invest in the fund today and start cash flowing in as little as a 30-day program. That's a 506C Reg D Silvercrest Opportunity Fund, and I'm currently president of the fund. We could put $50,000 to $1 million to work in under 30 days and start earning interest. So let's go over to the next deal, guys. I'm so excited to be here. We got multiple notes coming available. Check this out, okay? So lot 69 here in Tempe, Arizona. And forgive me, normally I would pull this up on our website, Win Mobile Homes, but that's currently under construction. So we're revamping the website. But this 4-bed, 2-bath that we bought, I think for 10 grand, we put $80,000 into this unit with new granite, new cabinets, new siding, new electrical, plumbing, new roof, new tile backsplash and tile showers, the whole shebang. I don't think anyone in the nation is remanufacturing mobile homes like the product that we provide. And that provides us that much more of job security here in the Arizona market, but so much so that now we're being invited to go to other markets. And sorry, I'm kind of speaking a little quickly, painting over these pictures a little quickly, so forgive me. This 4-bed, 2-bath. Sonny, maybe you could just talk about these payments. What is this payment? What's the down payment? And how much are we selling it for?
What is this one?
This is lot 69.
Okay, before I get back to that, I wanted to tell you what I thought the benefit was to the construction note, and that is that Win is the borrower, so the payments are guaranteed. There's no default. When you were asking me earlier about the benefit to a construction note.
No worries. So this property is for sale at $122,500, I think it is. So for $122,500 is the purchase price. I think they're putting like $6,000 down. They'll have another $2,000 in closing fees and insurance and taxes. They got ample skin in the game, right? This buyer got approved, okay, at $122,500 with the granite counters like this. I'm going to just pull up the exterior photo, but double vanities, tile showers, This all new drywall and such, open concept 4-2 off Kyrene and Baseline in a family park. So this is actually an all-age park. We'll just pull up the exterior photo here real quick. But at 122.5 with a $6,000 down payment, let me just cross-reference my numbers here. Give me just real quick. 122.5. So for a 20-year term on an unpaid balance or your acquisition cost of 116.5, first lien only lien on the property is $1,448 a month for 20 years. $1,448 for 20 years and an unpaid balance of 116.5. Right? So both areas of acquisition are immediately available. These homes will sell hopefully before the end of this month. Merry Christmas to everybody, by the way. We're in
the Cal-Am property, which is one of those top communities that we really like.
Cal-Am is one of the largest institutions that owns mobile home parks. We've been courted and have garnished favor for the number 3 in Cal-Am properties. So they're a $1 billion company probably, and we're being invited not only from them, but a couple other institutions into potentially other markets. So a lot of people are like, Sonny, where do we find our deals? How do we find all these homes? How are we doing all these transactions? What would you have to say to someone asking that question?
You guys are driving the communities and you're creating the relationships with the park management and the ownership to not only be referred by them, but also to do business directly with them. They appreciate the level in which we are improving the homes in the community, and they want to give us more opportunity to do that.
I had the number 3 in Cal-Am verbatim say, we've never done anything like this with anyone. So the uniqueness of what we're solving, not only here in our local market, but also possibly some other markets coming soon, creates a true scalable opportunity, with affordable housing being one of the biggest needs in the nation right now and little to no alternatives from high rental cost to non-reduction in interest rates like people want to unaffordable residential real estate pricing nationally. Where's the give? They talk about, ADUs and tiny homes. You know how many mobile homes there are in America right now that nobody's talking about? It's the funniest elephant in the room I think I could think of right now. And we've been in this business for 8 years. We happen to just fall into one of the biggest needs in the nation. And with complex equations, right? Creating a seller finance strategy that actually fits for the end user and the investor. If an end user can match or beat market rent with ownership, that's literally the definition of solving the housing crisis. And it's not in the boonies. We're not in Alabama. We're not in the Midwest. We're here in the Arizona market, probably one of the top 5 markets that people are moving to in the nation, and just so happen to be in that market. So let's talk about another deal here real quick as I rant real quick. Sorry about that. I've got 1 or 2 more I'd like to go over today, if you oblige. Ooh. Go to our inventory sheet here. Here, let me see. Bear with me here. Lot 8, okay. So here we go. Lot 8, Tiki Thai Village. We've had this property sold, I think, 3 different times, and people failed to qualify or walked at closing for whatever reason. But this property is virtually the same rehab we did on Lot 96. So this is one of our classic Win Mobile Homes products that we facilitated out in the market. I bought this home for $500 and actually did a full vlog about it about a year ago. We sat on this home a little bit longer than we originally anticipated, but now we've got a buyer. Pricing wasn't so much an issue, just kind of timing in the market and things of that nature. It's all about timing. So this 3-bed, 2-bath in the West Valley, right? Completely remanufactured, new drywall, granite, new roof, siding, flooring, paint, the whole shebang, turnkey product. This borrower is paying 87.9. So let's get a little bit better picture here while I bring this up. At 87.9 is the price point. The buyer's putting a $3,000 down payment and still will have some additional taxes and insurance to come up with. But for even at that, at a $84,900 payment, unpaid balance for 20 years, that monthly payment is $1,055.75. Her all in is $1,970 a month, and she owns granite, new cabinets in a quality family community in the West Valley. You know, average rent for a 3-2's probably $2,200 a month. Excuse me. And you're probably on the second or third floor. And forgot to mention, at $1,970, that includes taxes, insurance, monthly service fee billed to the borrower, and the home payment and lot rent. All fees estimated at the end of the day, included within that transaction. This note is immediately coming available. Buyer is actually approved by the park already. So this is one that's hot off the press. Don't hesitate to reach out if you have capital today. This is literally live deal flow. And I don't think anyone does it like we do here at Mobile Mailbox Money, to show you back office strategy into the notes that are actually being conducted here in the Arizona market correctly, with the proper underwriting, the proper disclosures, with RESPA and TRID, as well as having a licensed mortgage officer originate the note, and going through a title company if it's over 50,000. This is literal golden nuggets and a bow of capital investment provided to you today. I'm going to just air it out real quick. Does anyone have any questions before I go over the next deal? We went over a lot there. Feel free to put questions in the chat if you have them. Sonny put mobilemailboxmoney.com in the chat. Appreciate that. That's where we post these notes for sale, and you could get first right of refusal of these notes that are coming available today. So that's lot 8, Tiki Thai. We're going to keep her rolling here. Let's see if I can't pull up this other one that's a little bit different structure. Bear with me because these deals are happening live. I actually got a referral from an individual in Business Network International that brought this home to my attention. Business Network International is one of the largest referral-based networking communities in the nation. So our group did $13 million in business last year collectively. Win Mobile Homes and Mobile Mailbox Money, as well as Silvercrest, has done a combined about $2.5 million in capital investment, manufactured home transactions, purchases of mobile homes, and all the above. So let's see if I can't bring this one up. It's actually on the MLS. We just applied for the property today, and you won't believe what I potentially have this bought at. So bear with me here. This home, I actually did a vlog on yesterday. So Mobile Mailbox Money vlog 135, I think it is. It's either 134 or 135. I have 135 vlogs of capital investing. View those at any given time at your discretion. But this home, I did a walkthrough. This home has literal mountain views of the mountain. It needs some TLC. We're estimating a rehab of about $40,000. I paid $20,000. Okay, so with another $20,000 probably in carry costs and lot rent, this double wide manufactured home, and after talking to the agent, we think it's maybe worth a little bit more because he has, I think, 10 or so. He's done a tremendous amount of transactions in this one park in the North Phoenix market. It's called Boulder Ridge. You could even look it up on the MLS right now if you wanted, but it's sold. We're taking it. This 2-bed, 2-bath in mountain views we bought for $20,000. Our estimated rehab is $40,000 with new granite cabinets. We'll get everything painted, new flooring, things of that nature. I wish they had the mountain views in here, but that'll have to be viewed by you on my vlog. So at 80,000 really is what my all-in cost is. I'm looking for 100 as a construction loan. Sonny, what's a construction loan?
It's a note that pays 10% monthly or 12% deferred on a 1-year term. Our construction notes hardly ever last anywhere near that. They're usually 3 to 6 months, maybe 9 tops, where the borrower would be established, and we would come to you and say, okay, now we are going to have a long-term note. Do you want to have the first right of refusal to take your construction note to 100% assignment note, or would you like to roll over your funds to another construction note if you prefer to stay in the short-term game, or you'd have the opportunity to cash out at that point?
So still a double-digit interest rate, collateralized by first lien with a qualified operator on literal gold out in the marketplace. This home will be worth $150,000, and comps facilitate an exit like that. We'll probably list with that same agent just to get our local sauce in the community. So at 100,000 first lien position, that's $833 a month. $833.33 a month for a 1-year term. Will probably mature within that time. We drafted at a year just in case it goes past 6 months. That way we don't end up having to tap you for another contract or an extension. We're here to provide you passive investment, right? Not have to hit you all the time at the end of the day. So that's $833.33 a month for $100,000 in an interest-only payment. Seller finance notes are principal and interest payments, and that's why you use a mortgage calculator. But knowing that this is interest only, that's a pretty easy reverse calculation to find out what your return would be. And obviously it's backed by this home and our exit strategy. I do encourage you to go view that vlog. I talked to the agent literally through meta glasses. I think I used the meta glasses more than anyone in the nation. I'd care to argue that fact. It's literal first person point of view investment strategy in manufactured housing. We're going to open it up again here, taking a shot in the dark. Does anyone have any questions? We're getting thumbs up. We're getting hearts in the chat. Appreciate you guys interacting today. This is as involved or uninvolved as you'd like, so we'll air it out a little bit. So that was like 3-4 different deals. Let's see if I can't bring up another one here. A lot of people hate on manufactured housing, and I think it's the most comical thing in the world because we see real give back as also, solving a problem with the solution, creative finance, alternative housing, and a higher than average return for our capital investors. And the people that we talk to that don't like manufactured housing are okay if the land is included. Well, obviously, land being included definitely elevates the price point. Average manufactured home on leased land today is $50,000 to $150,000, right? Maybe a little bit less. That's kind of average. Say a mobile home on land could be $180,000 to $350,000 here in the Arizona market. Average single family pricing here in Arizona, I think, just crept below $400,000. We're still about $400,000. And for an individual to qualify for $400,000, we went over last week on our mastermind. You got to make $80,000 a year with little to no debt. So talking about land and manufactured housing, bridging the gap between residential pricing and a leased land manufactured home. For the people that frown on manufactured housing, I got a deal for you today. So we have a lot and home included. I bought this from a contact from Arizona Real Estate Investors Association, and we have a buyer for it. So let's see real quick.
You're talking about Desert Dawn, right?
Yeah, Desert Dawn. Thank you, Sonny. We got a bunch of deals going. It's hard to keep track. That's why you have to have intelligent individuals around. Desert Dawn, lot 70. Let's see if I can.
Currently under contract for $185,000.
Boom, boom, boom. I think we bought this for $100,000, and we pulled a hard money loan out to make the transaction. Getting hearts in the chat. Appreciate your interaction today, Joe Franzis. Hopefully I said that right. Sorry to butcher that. Happy you're here today. So this is East Mesa. Ellsworth and Broadway, 3-bed, 1-bath, currently pending at $185,000. We're getting another heart in the chat. Appreciate you, Archie. So this is 937. What's the address?
South 91st Place, Mesa.
937 South 91st Place in Mesa. Thank you so much. This 3-1, we did a light rehab. I think we probably put 10, 15,000 into it, to get this stuff fixed up, fix any leaks and things of that nature. They've got a storage shed, looks like a nice closet there. Affordable housing, people. These aren't the finished photos, just be aware. Washer dryer included in the purchase. They got a decent sized bedroom here. Looks like, just a couple steps up. Here's the pre-rehab condition. We've painted and such since then. So you're looking at, true transparency here into the numbers, the transaction, where we found the deal, how we sold it. We're actually selling it, I believe, on a lease option in order to still hold title. So this is actually quite unique. I'm glad I'm even talking about it. Nice size, living area here. But let's just talk about the numbers real quick. On 185, right? As an investor loan, this buyer is paying a lease option. There's less hardship associated with there's hardship associated with an owner-occupied unit, and not a lot of people know how to conduct a transaction like that. Full underwriting criteria, goes through a licensed underwriter, goes through a licensed mortgage officer in order to originate the loan. They get qualified. This is an investor loan. So when Mobile Homes has title to the property, we're doing a lease option on the home. Sonny, do you know what kind of proposed payment we're getting from them?
We have made arrangements with them for them to make payments for 5 years. I don't have the total amount, but they stay renters for 5 years, but their rent payments will be applied to the purchase of the property. It's just to confirm that if they're not the best pay on time people, that they can be evicted instead of have to be.
So it says $19.50 on the sheet. So we'll go with that. That's an estimated fee. Okay. Just so you're aware, all fees are estimated today until final in writing contracts are signed. So I appreciate you guys being here today. This first lien position, say it's a proposed $19.50, which I'm betting that it is because it's on the sheet, right? Say we're pulling out 80% of value at 185 on a performing manufactured home, real property asset. 185 on a first lien times our proposed interest divided by 12 is $1,541 a month, right? So now you get first lien collateral on this property that Win Mobile Homes owns, and now we are performing. Okay, so 185 is 80%. I'm sorry, hold on. Wait, that's not right. Let me back up. 185, sorry, I'm going a little quick, times 80% of value is 148. 148,000 for a 1-year term times your proposed interest divided by 12 is $1,233 a month, right? So you hit your cart to I think, how many rentals do we own? We probably own 40 rentals here in the Arizona market, 15 in rehab, 7 in sales, 5 in management, 2 in investor relations, and me and my father are partners. But that's 148, 1-year term, $1,233 a month as an interest-only payment, right? If you went deferred, we could potentially provide you a little bit higher of a return. But this being performing collateral and us having the nimbleness to acquire the home, find a borrower, if they end up not fulfilling the full 5-year term that they have proposed, we'll just reperform that asset. Why? Because we have done literally hundreds of transactions off these cross streets. Sonny, do you know how many deals Win Mobile Homes has done?
Total?
Gotta
be hundreds.
Throw a guess.
It's gotta be 1,500.
We're not quite. We're getting close. I think we've done 400 deals. It's over 350 over 8 years of being in business. Our repossession.
You're talking about just notes. You're talking about just notes.
All the above. But yeah, our default rate is 2%. Why do we have a default rate so low? You would think that a manufactured home, those people are not going to perform. They're going to pull off with the home. They're trailer trash. Sonny, what would you have to say to facilitate people having inquiry of the validity of our 2% default rate?
At some point in the last decade, the term trailer park changed into resort style manufactured home community. And some people didn't follow that and don't understand that how much of a better situation it is and why it's a niche market, because we still have a lot of people that say, oh, I wouldn't buy a trailer park, and they don't understand that, some of these homes are nicer than regular real estate. And there's a real market for it, and it's an underserved market, and it also meets the need for affordable housing. So it's a win-win situation for our investors to have the backing of the properties, and it's creating fitting a real need in the market.
Fitting a need, solving a problem, and these individuals are also getting underwritten. It's not
That's where we're going with that. They're getting double underwritten by the NMLS standard of underwriting called Dodd-Frank compliance. And just to briefly run through that, they can't have any active bankruptcies, no felony convictions, they can't have any charge-offs on their credit report that have anything to do with a rental property that they've ever had or a utility service. They have to prove that they make at least double what their payment is. They have to have a 43% debt to income ratio. Different communities have different requirements for their credit score, but the lowest ones are 550 and some of them are as high as 700. So they're pretty well gauged for their what they call ATR, ability to repay.
So in other words, it's a bank quality underwriting. We're almost a private bank here. And it's kind of funny to say it that way, but this is becoming the bank. At the end of the day, why do banks not buy these notes? Why don't banks lend on manufactured housing? Well, there's a few private institutions that do. Warren Buffett owns 21st Mortgage. And if someone doesn't have 2 years of tax returns, they don't take that loan. Well, not how many people are really doing their taxes every year? Not a whole lot. There's upstanding, intelligent individuals that are probably on it more than others. But at the end of the day, why should that individual not get financing just because they don't have tax returns? That's one case-specific item of that being truly a valid ability to repay, right? A valid hedged risk mitigated position. And actually, the bank should have took it at the end of the day. They're just on their streamlined construct of their guidelines. And in order to do scale, that's items that they put within their guidelines, right? To do all 50 states at the end of the day. Well, we know Arizona, we're the largest dealer of niche market manufactured housing probably in the nation. And we know the market. We have the availability to take just that small additional elevated risk of taking an evaluation further, opposed to just using artificial intelligent underwriting or, whatever you want to call it at the end of the day. We take it under a microscope and still qualify the individual and put that note out for others to buy. Why do we put notes out to buy? Why wouldn't we just hold every note? Well, if you do $3 to $5 million in business a year, you're probably going to run out of money at some point. So for us, in order to further capitalize on the need for affordable housing in the Arizona market, that's why we're bringing you in here today, showing transparency, how we do deals, where we find deals, in order to provide you the trustworthiness and availability and comfortability to be able to buy notes just like this. And if I could, if you're sitting on here and you have $50 million, I won't sell another note. So I'd be happy to take that on. We could put $1 million to work in under 30 days. And with additional capital and appetite, we pass on deals left and right. Literal gold we're seeing leave our hands because of lack of capital. And it's not putting a strain on operations, but it's putting a strain on the scale of what we have available here in the Arizona market. I'm going to just open it up one last time here. Does anyone have any questions today? We went over a bunch. So I've taught people to raise money. We've converted with a few other people that learned notes through education platforms like the Note School, Note Investor University, the noteinvestor.com, where they've leveraged their education in notes and started raising capital to buy our notes. Why? Because they know the yield is that much higher on these particular transactions, as well as, to try and be an intelligent individual, go shop paper stack or create relationships to find notes, and then still have to get a discount in order to hit your desired upon yield, as well as validate if it's a underwritten qualified first lien position, creates a challenge to scale one's business. And when you're wanting to raise capital, it's easy to go and find capital and then you don't know where to put it. Now you got to go scrape, the market to figure out where you're going to buy the asset. And by the time you find it, that investor may have walked away, with that $100,000 to $200,000 because you couldn't find a deal. Well, I would love to align myself with other like-minded individuals wanting to scale their private lending and raising private capital business. I think we've had probably 5 other individuals that have done it via hypothecation, where they take on the risk and pledge the asset to their investor. That's been probably 5 people. We've sold to 10 different hedge funds over the past 8 years, and have our own fund. So to be able to say, under a structure, what does that look like at the end of the day? Well, I go to my Uncle Sal, say, Uncle Sal's got, $500,000 that he told me about yesterday, oh, it's ringing a bell now, right? And he's looking to, talking about hardships. I can't find a single family property to buy and rent out. Oh, I'm sitting liquid because I'm scared of the market. Oh, I just liquidated, IRA or working capital in a note. I just got a payoff. I'm tired of 4% returns in CDs, stocks, bonds, and mutual funds. That's the case specific verbiage to capitalize on with the deals that I brought you here today. And what do you do with that, right? Say, hey, Uncle Sal, here's the deal, right? I'm going to pledge this note and give you liquidity within a 1-year term. You get a collateralized lending opportunity, right? I'll pledge that note at a 10% return to you, Uncle Sal, interest only for a 1-year term on a multi-year note that's stabilized, right? This isn't non-performing collateral. We don't have to develop a lot. We don't have to transport a unit. The buyer's already bought and qualified and is cash flowing, say at a double-digit interest rate. So you pledge that note for less than what it's yielding, right, in order to capitalize on the margin, creating an arbitrage of interest rates. So you're arbitraging money on money and making capital with none of your own money. It's called OPM, other people's money. And, to take on that risk for a 1-year term could be a little bit daunting for some individuals. Well, in note investments, it's called note investing because it's the lowest risk component in real estate investing. If you package it correctly, underwrite it correctly, and ultimately get it to a performing nature, that's the lowest risk investment strategy in the nation, right? And it just so happens to outperform other strategies. People get a little bit concerned. Oh, why is it such a high return? Sounds kind of risky. No, that's not the case, people. This is a new day and age. It can pay more and it can be less risky at the end of the day. So to pledge that low risk asset to Uncle Sal for a 1-year term at less than what the paper is yielding, now you effectively bought a note, pulled all of your own money out, right, and are still cash flowing. Depending on the rate, could be, as high as 15, 14%, and you arbitrage from 10 to 14, say hypothetically, right? You make a 4% return with none of your own money. That's literally life-changing. And why is that so important to understand? Because as you go out into the market and buy notes and become a note investor, you run out of money. It's not because something's wrong. It's not because you have a lack of intelligence. You just buy notes and end up performing on a trickle real estate investment income, right? Well, a trickle income's hard to build up, right? At the end of the day to another, say, $50,000. So as you develop your education and develop your strategy into note investments, you say you buy a few notes, it's $250,000 across 5 notes, right? At 50,000 a piece. Is that right? Yeah. So 50,000 a piece. You now have 5 within your portfolio. They're performing their third-party contract service. You're receiving payments. Say you're receiving at a 14 or 15% return, right? You feel comfortable now. You understand the strategy. You're receiving profit. And you're like, man, I'm getting hungry for another note. I keep attending these masterminds. I want to buy another note. How do I do that? Well, you pledge one of your notes, or you pledge a new note that's coming available as an asset in order to garnish the investment. You say, hey, man, I bought a few of these notes. This stuff's performing. These guys are on a mastermind every week, out of the good faith of doing business and creating relationships out in the market. I'm going to pledge this note to Sal. Sal's going to get a 10% return. I'm still making infinite money. It's called infinite returns with none of your own money still in the deal. You now hypothecated one, maybe a few of your notes, right? Recapitalize and go out and do it all over again. It's called throwing money around in collateralized lending opportunities, literally life-changing. And that's a expert strategy. I don't, encourage individuals to get into that right off the cuff because it comes with its risk. In every strategy, there's risk in investment. And how do you hedge that risk? What kind of data can you provide in order to facilitate the risk mitigation, from rental rates to comps, to the underwriting, to the underlying collateral file, to the lien position, to third-party contract servicing, and having attorney-reviewed documents, all of that stuff that we bring to the table. Sonny, for the people that are wanting to kind of raise capital that we've taught, what's kind of the common questions that they ask, when they're kind of conducting something like that? You talk to a lot of investors, so appreciate it.
One of the most popular sources right now is people using their IRA or solo 401k or something like that. I feel like I've pretty much become an expert in the last few months of dealing with people with their specifics on what their contracts have to look like, because it's listed on their through their investment portfolio, and the time that it takes for the turnaround and everything. So that's a really, really popular thing right now. People are redeploying their investments into something that they didn't think of before because it's being so successful and it's very secure. And the investment companies are approving these purchases now. So I would say that's probably our most prominent source right now.
Oh, so this is a qualified product I can buy with my IRA?
It sure is.
Wow, most people don't know that. Did you know Donald Trump actually just made an executive order in order to facilitate access through 401ks to invest into alternative investments? That's actually coming here. They've already made the order. They're probably trying to figure out how to logistically do that between Charles Schwab and a couple other big trading brokerages. But at one point, wealth management firms and real Charles Schwab entities are going to be leeching their fingers into the industry and to be set up currently, in a note investment strategy that's qualified, as well as offering the fund for larger level equations to hedge risk out in the market. Why are they doing all of this? Why would everyone and their mother start Googling alternative investments or, making executive orders? It seems like kind of a left field play. What's the back office advantage that they're not talking about when they say, oh, we're looking into alternative investments? You know why? Because BlackRock, Vanguard, and State Street have bought up 30% of single family residents in the nation. Did you know that? Literally the most recent World Economic Forum, Charles Schwab said, we're going to turn everyone into renters in the nation and they're going to be happy. And they're doing it. They may own more than 30% of single family residents. So what does that mean for investment? at the end of the day? Well, for the average investor looking at the lack of single family property in the nation, the unaffordable price points, one could argue, oh, prices are going to fall 20, 30%. It's definitely market contingent at the end of the day. But knowing that there's a new institutional appetite into single family residence, at one point it's like the stock market. It hits a certain benchmark, and now they go in and throw a couple $1 billion at single family residents again. And why are they even doing that? Because in 2020, they lost trillions of dollars in the stock market. Stupid whales manipulating the market, and they lost crazy money. So they infiltrated into single family residence. So that's single family, right? Talking about average purchase pricing, the likelihood of that falling 20% is literally none. I don't know, have a crystal ball. That's my projection. We'll look back in a year and see if I'm correct or not. That's single family. For the investors that have been in multifamily, multifamily's always been a historic shiny object in the room, right? And you got Grant Cardone, you got crazy other smaller institutions buying single family. Well, over the past 3 years, with the fluctuation of commercial interest rates, I think 5 of my investors, larger high net worth individuals, collectively have lost a couple $1,000,000. And one of them lost on 9 out of 10 multifamily plays because they bought without thinking that interest rates were going to double. And there's bloodshed literally in the water for multifamily investing. That could create opportunity, but is it there yet? I don't think that's so much the case. I could be wrong, but there's still people operating in niche markets and making profit. But, I'd say 6 out of 10 syndications are probably going out of business and have to sell for a loss or have a capital call in order to mandatorily refinance, right? So that's multifamily, potential bloodshed. You got single family being priced out for investors to actually earn a return because of interest rates and price point, and you still have to qualify for a DSCR loan. They do qualify on base rent, but there's hoops to jump through at the end of the day. So why are larger entities looking into alternative investments? That's exactly why. They're looking into Bitcoin, they're looking into other stuff, data centers and stuff like that. And they're also, acknowledging that affordable housing is one of the biggest needs in the nation. So to be providing a niche market asset like this with something that's being Googled at higher frequencies than ever is now a more important time literally than ever. The institutions are buying mobile home parks for the 50-year return that those provide to own the low, not a lot of sweat equity in owning dirt. There's still hardship in owning an asset like that. This literally, I'm at a point in my life where I don't want to own anything. And how can I do that and not own literally anything? That's a note investment strategy. And once you understand the true financial freedom that comes from stacking cash flowing first lien positions, it's literally life changing. You check your account once a month and that cash is there depending on how you acquired it. If you invested in the fund, that's guaranteed returns, 506C at 10% return for a 1-year term paid monthly, a 12% return for a 3-year term paid quarterly, or a 14% return for a 5-year term paid monthly. 506C Reg D accredited investors only. There is risk in investment, so please conduct a review with your financial advisor to make sure that you're a candidate for that. Sonny, for people that we've talked to that buy notes, they're looking at alternative investments, why would someone invest in the fund opposed to a single note investment?
No tenants, no toilets, no termites, no taxes.
So that's a note investment, classic verbiage. In the fund, you become a per unit owner share in my portfolio. So I currently have about 1.6 million working in my portfolio, and all of my notes are performing. I haven't missed a monthly distribution, but that provides a hedge across multiple notes instead of one investor on one note and cash flowing, right? What does that mean? That means if one note stops performing in the fund, the other notes will ultimately continue to offset any potential loss or lack of cash flow in order to facilitate a bank quality return, tripling what they get on CDs in the bank. So, owning a note, one investor for a 20-year term, that risk is yours. We don't leave anybody high and dry at the end of the day. Let's say in case of non-performance, now switching to one note, one investor, they bought it for 20 years. Sonny, when a note goes non-performing with one of our investors, we have a 2% default rate, so it's hedged, right? Risk mitigated. But if that does end up happening, and the risk comes to fruition, what are the benefits that are provided when buying a note from us in case of non-performance?
The number one benefit is that we have boots on the ground in all these communities where we are selling the notes on these properties. And so if the payment is even 3 days late, the chances are we're going to have somebody knocking on the door, trying to find out what's going on, trying to figure out how to help them get it together, get back on track, or do whatever is necessary to repossess, to redistribute. But for the most part, it's usually somebody was just sick and they couldn't work, so they didn't get a few paychecks and they fell behind. So we have all different kind of options we can give them. We offer to put a payment or two on the back end of the note if the investor agrees to that. We've even given some of our borrowers part-time jobs within our company to help them catch up. Just, having a heart and meeting a need and finding out what is the problem and see how we can fix it. And we do that.
So, what's it called? A loan modification. So, we can modify the loan, figure out what the story is in order to facilitate an answer and, figure out how to best navigate that. Let's say someone were to just put their head in the sand. It's time to go to repossession. And that's not a foreclosure. It's important to understand. So repossession could be 40 days from non-payment. And at full repossession to the investor that bought the note within their portfolio for a 20-year term and the full yield, right? They get our staff at cost. So opposed to them having to go hire an attorney, hire a sales agent that knows nothing about manufactured housing, we repossess the unit, $750, probably paid 2 months in back fees, a lot rent, that's about $900. So that's $1,800 plus $750, that's $1,550 out of pocket. You'll have a $4,000 fee to a commission to sell the property and about $1,000 in closing fees. 4, 5, that's about $6,800 to find a new buyer, get it reseller financed, and hopefully get reperforming in order to make potential additional profit or mitigate loss and pick it up on a long-term amortization schedule, right? So appreciate Dr. Robert. You got a question here. Hi, Alden. I have a question. When you say the word note, is that related to some kind of loan system? Do you have another meeting like this scheduled soon or early next year? The holidays are coming up. Yeah, have Merry Christmas to everyone. But a great question. Well, most people don't know a note is a loan. Did you know you could buy a loan? Most people think of a loan as being the borrower, but you could position your capital and take the bank's position, right? So instead of Wells Fargo facilitating the transaction, Wynn Mobile Homes sold it on paper to John, creating a note. A note is a promissory note, or in other words, a promise to repay, right? And the note is backed by the collateral, which is secured by a lien position on the property, okay? You become the bank. In other words, you finance this home for the borrower at closing by buying the position, right? Instead of you giving them the money to go buy the house, we've already put it in a bow, right? And you come in and drop your capital in, and out comes the loan, the lien, and the collateral file in your email. So now you own that loan. You didn't have to go find somebody to lend your money out as a private lender. You bought a position as the bank, right? And you are subject to the terms of the contract. So if the home is seller financed at a $55,000 unpaid balance and the monthly payment is say $500 a month, you'll be making $500 a month for the 20-year term that the contract is originated at. So great questions. Do you have another meeting this year? That's a great question. Are we going to do this next week? What's next week? We're getting so close to Christmas.
Next Thursday is Christmas.
Yeah. So I would do a Christmas meeting. I've worked way too much. We'll probably skip that day, I'm guessing.
And then the following one will be New Year's.
So we'll take probably the next 2 weeks off, but the likelihood of us not doing transactions within that time is none. We do business every day of the week. We do take time to spend with our family, but we're available at the end of the day, probably not New Year's Day and probably not Christmas Day, but we're out showing homes, creating affordable housing, cultivating the American dream, and providing a double-digit return in a bank quality position out in the market. Literal gold that we're putting out here today. Appreciate your interaction. Today is brought to you by Silvercrest Opportunity Fund. We're here at 159. If you're accredited, let's talk. I'd love to put your $500,000 to $5 million to $50,000 to work for a 1-year term at 10% net paid monthly, a 3-year term at 12% net paid quarterly, or a 5-year term at 14% paid monthly as an income-oriented investment strategy. Thank you. That makes sense. I'm new here. This is a great meeting and information. Dr. Robert, we're getting hearts in the chat. Boom, 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 boom. Appreciate you guys being here today. Vertically integrated and manufactured housing and investing like Warren Buffett. We'll see you at the new year. Please call today, 602-888-CASH. Talk to Sonny, talk to Sean, talk to Anna. Let's get your capital moving. I've got deals to do today. If you have $50,000, $150,000, or $1 million, I want to talk. You guys have a great day. See you next time.
Merry Christmas.
Fired up today. Appreciate you viewing. That's one step closer to financial freedom. What do we call that? I call that mobile mailbox money. Bye.